If you're a freelancer or a contractor here in the UK, you need to know that a major tax reckoning is just around the corner. That kind of grey area the gig economy has operated in for years, well, it's about to vanish. HMRC is gearing up for a crackdown that is going to change pretty much everything. So let's break down exactly what you need to know right now.
So, I've got to start with a really important question for you. I want you to think about your current setup, your contracts, your umbrella company, the way you're actually getting paid. Are you 100% certain that it's all above board? Because HMRC is about to roll out new rules that are so powerful they could make you personally liable for a tax debt that isn't even yours.
Now, to help us navigate these pretty tricky waters, we've based this entire analysis on insights from the absolute experts at Pro Tax Accountant. They are specialists in guiding contractors and freelancers through these exact kinds of complex changes, so we can get right to the heart of what matters.
So here's our game plan. First, we're going to look at the crackdown itself, and then we'll dive into the new rules. Now, you're going to want to pay really close attention when we get to the liability chain. Trust me, this is the part you absolutely cannot afford to misunderstand. After that, we'll look at the red flags to watch out for, how to become audit-proof, and then the essential next steps you need to take.
First up, let's talk about the big picture, HMRC's 2026 gig economy crackdown. And I want to be crystal clear here. This isn't just about tweaking a few regulations. No, we're talking about a complete and fundamental overhaul of tax compliance for the entire temporary labor market in the UK. Go ahead and circle this date on your calendar, April 2026. This is the moment when powerful new legislation officially kicks in. And from this day forward, the old ways of working, the old assumptions about who's responsible for the tax, they're gone for good.
You see, for years, some non-compliant payroll and umbrella companies have been playing a game of hide-and-seek with the tax man. They'd pop up a scheme, get shut down by HMRC, and then just rebrand and start all over again. Well, HMRC is now saying the game is up. This crackdown is specifically designed to slam those loopholes shut and bring real transparency and accountability to the entire supply chain.
So, how exactly are they planning to do it? Well, HMRC has come up with a very specific three-pronged strategy. It's designed to dismantle the whole ecosystem of tax avoidance. Let's break it down.
Their strategy is threefold. First, they're going after the promoters, the people who actually design and sell these tax avoidance schemes. We're talking hefty penalties, maybe even criminal charges. Second, they're targeting the enablers, the advisors who give these dodgy schemes a false sense of legitimacy. And third, and this is the one that affects everybody, they are introducing something called joint and several liability.
And look, this isn't just speculation. The government's own Budget 2025 documents state, and I quote, "The government will legislate to further close in on promoters of tax avoidance. They're putting their full weight behind this, confirming that this crackdown is a core part of their entire fiscal strategy." Okay, this brings us to the most critical part of our discussion today, what I'm calling the unbreakable liability chain. This is where the risk shifts from being some distant problem to something that could land right on your doorstep. Stay with me. This next point is where the real danger lies for freelancers and for the businesses that hire them.
So, what on earth is joint and several liability? It sounds like a stuffy legal term, but the definition is brutally simple. It means that if there's an unpaid tax debt somewhere in the chain, HMRC doesn't just have to chase the company that failed to pay, they can pursue any party in that supply chain for the full amount. Not just a share of it, the whole thing.
Let's make this real. Imagine Sarah. She's a freelance IT contractor in London doing great work for a big bank. She gets her pay through a recruitment agency, which uses an umbrella company. But that umbrella company uses a dodgy scheme to underpay its PAYE tax. That's the pay-as-you-earn income tax. In the past, that was the umbrella company's problem. Not anymore.
Here's how that debt travels up the chain. The payroll company defaults on the tax bill. Under these new rules, HMRC can just bypass them completely and go straight to the recruitment agency, demanding 100% of the unpaid tax. And it doesn't even stop there. If the agency can't pay, that liability can travel all the way up to the end client, that bank Sarah's working for. They can get hit with a massive bill for a contractor they thought they were paying correctly all along.
So, knowing all these risks, the obvious question is, how do you spot a problem before it's too late? Let's move on to the warning signs. Think of this as your practical checklist to figure out whether your own setup might be a giant red flag for HMRC.
All right, time for a little reality check. The biggest red flag of all? Take-home pay that just seems too good to be true. We're talking 85, maybe 90% of your day rate. Also, you've got to check your payslip. If you see payments described as loans or advances instead of salary, that's a classic tax avoidance tactic. And the other things on this list are just as critical, especially if you're classified under the Construction Industry Scheme, or CIS, without the client's direct approval.
And here's a quick pro tip for you, because this is a trap so many people fall into. You might be thinking, oh, I'm covered. My umbrella company has insurance. I'd say think again. A lot of these insurance policies have very specific exclusions for tax avoidance schemes. Relying on that policy could be like relying on a chocolate teapot. It offers no real protection when things heat up.
Okay, after all that doom and gloom, let's talk solutions. How do you actually protect yourself and your business? How do you become audit-proof in this new world? Well, it's all about being proactive and choosing a secure, compliant engagement model right from the very start.
The choice you make here is absolutely critical. High-risk models like these unvetted umbrella companies leave you completely exposed. The safer, low-risk options are all about transparency. This means things like traditional payroll or working through your own limited company, often called a personal service company, or PSC, so long as your employment status is properly assessed under the IR35 rules. Or using a fully compliant umbrella company that gives you proof that all taxes are being paid. This is your best defense.
So the crucial point is this. Whether you're a freelancer, an agency, or an end client, you can no longer afford to be ignorant about your supply chain. This requires a real psychological shift from just getting the job done to actively managing your own compliance. Because pleading ignorance will not be a valid defense when HMRC comes knocking on your door.
And that brings us to our final section, your next steps. These changes are coming, and they are significant. But with the right advice and some proactive measures, you can absolutely protect your business, your clients, and your financial future.
So I'll ask you one last time. Looking at everything we've covered, the new rules, that liability chain, all those red flags, are you truly prepared for April 2026? If there's even a shadow of a doubt in your mind, now is the time to act, not when a letter from HMRC lands on your doormat.
If you need to get your arrangements reviewed and make sure you're protected, the absolute best course of action is to speak with an expert. The team at Pro Tax Accountant can help you take control of your tax compliance today. You can reach them on WhatsApp or by phone at 07985-689912, or you can drop them an email. And just a reminder, the information in this presentation is for general purposes only and shouldn't be used by itself to make financial decisions. Before you do anything, you must consult with a qualified tax expert. Thanks for joining me.